everyone to the Mike Rosehart show. Apologies for just jumping on here. For those who are just joining in, we're gonna take a second and let everyone get on, let everyone get the notification. I will start by saying Canada is actually a tax haven if you're lean fire, and we're gonna talk today about tax havens. I am not a CPA. I am not licensed to talk about tax anything. So talk to your accountant before you make any decisions. I will talk at a high level based on what I've been able to uncover on Google. So it also attaches to another video that I've done here. If I'm having any lag here, I can jump over real quick from this internet to the other internet. Hang on, let's do that. I have two internets. I have Bell and Rogers, so I'm just gonna jump over 1 sec. Hear me? Hello? Am I connected? Somebody let me know if I'm connected. I was just jumping over. I have Bell and Rogers at my house now because honestly, where I live, Bell sucks and Rogers sucks. And so Bell will go down and then Rogers will go down and then Bell will go down again. So I have both internets for redundancy purposes. It makes sense for this channel. And for just, I'm doing video conferencing or whatever else. I'm back on Bell. See if it's any better on the Bell network. You guys hear me? Loud and clear? I don't know. I literally bought Rogers, had Rogers come and install gigabit 1000 meg internet just for this stream. And I'm on that and it crashes like this. Complete trash. Gonna call Rogers and tell them to shove it because this is the worst. Sorry. Back to the stream again. Have two internets and gigabit internet and it can't even load a stream. It's nothing more frustrating to me than bad internet. I don't know what's going on. Rogers, get your crap together. Bell seems to be working now, so I don't know. I think we're okay. It takes me about 8 seconds to switch between my Wi-Fi networks. I don't think it's a Wi-Fi issue. I'm fairly sure it's a service provider issue. Anyway, so back to our discussion now, a couple minutes in here. As everyone gets a notification, it actually just gives you guys time to jump on, which is totally cool. It takes a few minutes for everyone to get the notification. And depending on the topic, you may not even get a notification. But today we're talking about tax havens. We'll talk about real estate like we always do, and probably the stock market a little bit. But tax havens today is the primary topic of discussion. And I talked last week about exploring spending the majority of my time making my primary residence either Costa Rica or Puerto Rico or somewhere that there's some tax haven rules, because it makes sense at my earnings level. Just in the tax savings alone, I can live in a mansion, have the best lifestyle down there, and I still end up, after those expenses, way better off than staying here and living frugally. So it's just wild when you think about the tax savings of living in a place like that. But we'll explore that more in depth too, and I've been doing more research the last week about some of the distinct advantages in Puerto Rico and Costa Rica, and the lifestyle down there and the cost of living. And I've been talking with some realtors down there and just chatting and people living down there and trying to understand what it's like in both cultures. It actually sounds like a better lifestyle. Money goes further, and I get to save 6 figures in tax. But let's talk about Canada for a sec, because most of us are living in Canada, and most people who are probably watching my channel don't have the ability to just close up all their Canadian businesses or assets or their job and just leave. Most of us are chained to our business, chained to family ties. Something keeps us in Canada. So let's talk about retiring in Canada, because it's actually pretty sweet. When I retired initially, lean fire, I didn't need, and we all know, if you follow this channel, lean fire means living relatively lean on the financial independence retiring early spectrum. It's basically people spending less than $50,000 a year to live. And so I'm now more in the fat fire category, and that I can afford to spend a lot more, and hence the tax savings are actually pretty valuable for me. But for someone making less than $100,000 a year, I did a video maybe a year ago. You can check it out. It's still completely valid. There's great sources in that video to check out the facts on it and some articles you can read. But essentially, if you set up a dividend portfolio and you're a couple, if each spouse took $50,000 in dividend income, they could collect that when you collect a dividend from a Canadian eligible company, the Canadian company already paid tax. And so as an individual, you get a credit back as a dividend tax credit for that tax the corporation already paid. So let's say you buy shares in Enbridge or Scotiabank or Bank of Montreal, whatever, and they pay you a 5% dividend, you actually get a credit back for the tax that the corporation already had to pay. And if your tax rate is below, basically the way it works out is if you're making less than $50,000 a year in income and your sole source of income is dividends, then that $50,000 is tax free. If you're earning $30,000 a year in dividend income, it's actually in a negative tax rate. And so you actually be paid a little bit of money back from the tax the corporation already paid. So that 5% dividend from Bank of Montreal is actually a little bit more than 5% because you're getting money back. So it's like tax-free money, which is pretty sweet. You could set up a portfolio where you could collect $50,000 per spouse, $100,000 a year, every single year, forever, completely tax-free here in Canada. Where else can you live in the world where you have free healthcare? So there's no healthcare costs, nothing. Anything happens, you just go and it's all taken care of at the hospital. You break your arm, whatever, you need some drugs, in most cases covered. So that's pretty sweet about being in Canada. If you're lean fire, you have no health insurance cost. You have no cost related to medical. You're getting access to an amazing network of social services that exists here in Canada. There's some fantastic programs that are funded by the government, by the tax dollar. And let's not forget the tax-free savings account, or TFSA, which you can go and buy stocks in and collect dividends, or you can lend money out through your tax-free savings account in private mortgages and collect interest rates. So a couple, if they've been investing in their TFSA since 2009, the average person has about $80,000 to $100,000 in their TFSA. If they maxed it out every year, put the 5, 6, some years it was 10,000 that you can contribute. Depending on each year, there's a contribution room that every person can just contribute, and it's a flat amount. So roughly, a couple have about $200,000 in TFSAs. In the next 10 years, we're going to see that amount go to like 200, 250,000 per person in the couple. That could be another source of 50 grand. So you can potentially have, with your tax-free savings account, about $150,000 in tax-free income the government isn't touching. That's pretty sweet. Now, at my stage in the game, it's just hard for me with all of the businesses that I'm invested in, the things that I'm doing. I can't stand that limit, unfortunately. I wish that I could. I have to get a really bad return to stay under that limit. So for me, it's making sense to find a tax haven elsewhere. Once you break above that, once you get to like $200,000 a year in dividends, let's say, the taxes are not favorable, is my understanding. If you're working, as an example, and you have active sources of income from businesses that you're collecting personally, and then you throw the dividend income on top of that, not really favorable. So it has to be you're retired and collecting this $50,000 per spouse, plus another $10,000 or $20,000 from your TFSA in passive income. Initially, it'd be like $500 a month, but as the TFSA grows in contribution room, every bit of growth compounds the size of the tax-free savings account and therefore increases your overall tax-free gains you can collect from your tax-free savings account. Just a pretty sweet thing I wanted to mention when we're talking about Canada. Where else can you pay no tax on 100 grand a year in dividend income plus other small amounts of income? As an example, if you were to have kids in Canada, you get tax-free cash from the government if you stay below certain earning thresholds. And at $50,000 per spouse in dividend income, you actually qualify. I think it's like a couple $100 tax-free cash in your account every month per child. So if you have like 3 kids, you can collect like another $800 a month from that as well. There's another 10 grand a year in free money. So you could live like $10,000 a month in. That's actually not even lean fire anymore. We're actually in we're not fat fire yet, but we're definitely in the normal ranges of fire spending, and most people can live pretty well on that. So it's pretty interesting that Canada is actually a tax haven for early retirees. And if you structure right in early retirement, it's a fantastic place to raise a family, super safe, super, great environmental conditions, great healthcare, just an overall, pretty good country. So Canada has some awesome things going for it. And I got some flack for my video last week about, talking about tax havens. And on my Instagram channel, I've been talking on Instagram at Mike Rosehart, if you want to follow along. I've been sharing some stuff about tax havens in Puerto Rico and Costa Rica. It makes a lot more sense for someone like me, and I understand most people following might not be well into the multiple 6 figures with their earnings. I might not have, I have plans to make 7 figures a year for the rest of my life. Just because me being employed and actively invested with my time and my money into ventures that I enjoy, it just happens to make me 7 figures a year. So for me, it's going to be a little bit more advantageous to find a tax haven like Puerto Rico or Costa Rica. From a lifestyle perspective, we're trying to stretch your dollars. Totally makes sense to go to somewhere like Costa Rica. As a random aside, for those people who are just watching interested, a nanny in Costa Rica costs you $5 a day. So you could have one that's cooking and cleaning for you, like making your breakfast, everything for $5 USD a day. The average salary in Costa Rica is just over $500 USD a year for an unskilled worker. That's, you could arbitrage just the lifestyle difference down there and live like a king in theory, right? So there's some other advantages beyond tax havens in making your primary residence somewhere like Costa Rica. I mean, you could live there 70 months a year and still come back and visit family for the whole summer if you wanted to, right? And avoid the hurricane and rainy season. There's lots of cool strategies I see people doing online. And I'm going to share more about that as I explore it myself. But I want to give Canada the chance to kind of, I want to share with the audience that Canada is an awesome place. And you should give Canada a chance too. Don't necessarily leave Canada just because of what's going on in the political sphere right now related to the vid and everything else going on. But I think that Canada has some merits too. And so for the average retiree who could structure a portfolio that would make, purely Canadian eligible dividends. And by the way, this is Canadian eligible dividends only to get this tax credit. If you're investing in US companies and collecting a US dividend, you don't get the gross up tax credit. The way the tax treaties are set up is my understanding. Check with your accountant to verify that. Go online, do a Google search for yourself. This is just stuff that I've found from reliable sources that I've shared and have corroborated with others who are in the field who understand tax better than I do. But again, talk to your professional to find out if it's right for you. But Canada's an awesome country. So anyway, I'm gonna go down to the Q&A and see what's up in the chat. D How To, good to see you. Welcome back. Chris, great to see you again as well. William, a regular on here, says, evening Mike from a frozen Houston. Yeah, I've been seeing on Instagram that a cold spell has swept across some of the southern states like Texas and Louisiana and some places like that where it's really, really cold. It's cold here too in Canada. We're like -18 Celsius. I don't know what that turns, it's almost negative in Fahrenheit, I think. I don't know the conversion exactly, but we're quite cold here too. You're obviously not as cold, but you're used to those warm temperatures, right? And so I'm sure houses down there and the infrastructure just isn't set up to handle massive amounts of snow and the cold weather the way it is here, right? So it's a shock, I think, to the infrastructure down there. And feel for you guys. I see some of the stories of I don't know if you know the famous memes where they overplay that music oh no, 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 no. That song that plays. There's a lot of those in my Instagram feed lately where people showing roof leaks or people slipping. So that's kind of funny. But who else do we got here? Loud and clear. Okay, 11 tall can hear me. Perfect. Yuri, hey, how you doing? Good to see you guys on. We're on the Bell internet now, so it seems to be working. Rogers just seems to be complete trash. I don't even know why I'm paying for a second internet when I literally pay for it for this YouTube channel and Instagram, and it doesn't work when I need it. Nothing more frustrating than that. Perfect, you guys can hear me. Guess who's back? Mike, you've mentioned earlier that you wouldn't JV if you were to start from the beginning. How would you keep acquiring and keeping the properties if not for JV partners that carried mortgages? Yuri, I would still JV if circumstances made sense. In hindsight, with the appreciation we've had, it didn't make sense to JV. No one knows what the future holds, right? So I don't know if the market's going to keep roaring up or not, but joint venture partnering or JVing allows you to share the risk. And so that's why I JV'd initially. I liked the idea of risk sharing. If things didn't go well, you could share in that risk. If the market crashed 50%, I don't think it would, but you could share in that, right? In the same token, if you have a lot of growth or you're delivering great deals to your JV partner, you're giving potentially half the profit away. It's way cheaper and more economical for your business to be raising the capital from investors and providing them a fixed return. So you're still partnering, so to speak, with an investor, and you might even give them a taste of the equity, but you're not giving them 50-50. Instead, you're saying, hey, how about you hold the mortgage for me, and in trust, we'll do a joint venture agreement in trust, register at the lawyer, I will register on title to protect my interest, but I'll give you 20% of profit for holding a cheap mortgage. Or you might go to a B lender and just get a mortgage at 5% and borrow the money and then close the deal without the joint venture partner. So you can definitely take real estate deals down without needing a partner. Money is not necessarily the most valuable thing. People, I think, overvalue that sometimes. Depends on the deal. Sometimes the deal is the most valuable thing. Sometimes it's the execution to pull a deal off. I've had some rooming house type properties that take really good execution to pull off. And I think the management's more important than the deal itself, and sometimes more important than the money. But it just depends on the deal. And I think in most cases, management's the least valuable. And there's a lot of people who want to actively get into it and think they can do a good job at it. And many who actually probably could do a good job at active management. But I think management's the lowest of the three things you can bring to the table. unless you're a top executor. Deal is probably the most valuable right now in a hot market like this, and capital probably not so much, because money is just literally free flowing and being pumped into the economy. They're printing so much of it and forcing interest rates so low, forcing lenders to basically spend the money that they have into the economy, and so that's driving things in a big way right now. Yeah, I can answer that question sufficiently. You could definitely do it without that, but there is an advantage, I think, to having a partner with a cheap mortgage. There are other ways to get that, but definitely JV is one of the ways. If you've enrolled in a DRIP, do you pay taxes or only when you get the dollars to spend? That's a great question. I'm not a tax expert on that one, but a DRIP is a dividend reinvestment plan. And so the idea with that would be, as you receive dividends, the company might say, hey, instead of paying out this dividend, we will let you buy shares at 3% reduction in the price. So you get shares at 97 cents on the dollar instead of $1. And so it's advantageous for investors to reinvest their capital. They get a little bit of discount. The company doesn't have to pay out that distribution. They get to have that cash back. And my understanding is they would issue some shares that basically raise the capital for their corp. So I don't know how that would work from a tax perspective. It probably varies too between Canada and the US and other countries. So speak to your tax professional and think through that. In my mind, it would make sense if you weren't getting any cash, that you probably would have to pay tax on that dividend, because again, you're just keeping it reinvested in the company. But I don't know, you have to look into that. Maybe there's different plans that are eligible and are not eligible. I don't know. It's something you really want to talk to a tax professional about. Big Up Penguin says, where were you able to gain a lot of your personal finance knowledge other than watching YouTubers like yourself? So personally, Google's been the main place where I've gotten a plethora of my informational facts, I guess you could say. But I also have a finance and accounting degree from Western and the Rich Ivy School of Business. And I took a course in 4th year on wealth management. And that was a course that was pretty much built on and I also did value investing and portfolio management. And so in those courses, there was definitely some personal finance jargon thrown around. Like we had to understand how TFSA and RRSP works, or how to build a financial plan, how do mutual funds operate, and active management versus passive management, and all of that came from, I guess, my formal education. That said, I could have learned it all, and mostly did learn it all off of Google, and then refined that in school. And a lot of people in my class didn't retain it in the same way that I did. I live and breathe personal finance. I love it. It's like secondhand for me. It's what I like to talk about. It's something I enjoy. So for me, it's just part of who I am, and I like to talk about it too. So when I'm in a conversation with someone, I like to uncover their personal financial situation. I'm trying to give improvements and like whatever. And it's almost like I'm coaching with people without even trying to coach with people. I just like naturally want to do that with my friends and with people that I meet. So that's just like, that's me. Like when I'm in a room, I like to talk philosophy and politics and money. And so, yeah, I guess I'm kind of different and built different that way. Money's always been important to me. I think it's the lifeblood of the economy and the lifeblood of humanity. Really, like it's a store of our time. And so, people say, hey, what are you doing? When you talk to someone, the first thing they ask is, what have you been doing with your time lately? They'll ask it a different way. They might say, hey, what have you been up to? What activities you've been chasing, whatever. But basically, people are asking, what are you doing with your time? And they say it's rude to ask, what are you doing with your money? But your money is your time. They're one and the same thing. Talking about time, I've had so many time wasters lately, just bugging me on Instagram and on Facebook and all around in business too. And it's a challenge. I think that there's so many time wasters out there in our society. People who just want to pitch you for things. People just want to talk to you. People are interested in something. And as your time gets more valuable, you really got to guard, not just for your money, but for your time. And you have to learn to say no. And that's so hard for someone like myself to say no to people. I feel like a dick when like someone reaches out and sends me a nice story on Instagram, and I got to be like, no, sorry, I don't have time. That's something I've been challenged with lately when we talk about that. And there's a bunch of good blogs too to read. Aside from YouTube, there are lots of good Instagram followers you can check out that drop great daily content. And then blogs like Mr. Money Mustache, Early Retirement Extreme was a good one back in the day. There's lots like Millennial Revolution, Millennial Moolah. There's a bunch of blogs you can follow out there. That I don't read them much anymore, but I used to read all those blogs all the time. That was like, I'd be laying in bed at night just on my phone, just reading like how to retire early, personal finance stuff. it was a driver for me, and it's not so much anymore because I've sort of mastered that, and it's just a lot of repeat. Gary, Ash, how you doing? Gary says, how do you feel about Wealthsimple? Would it make more sense to invest with the TFSA? I think Wealthsimple is fantastic. I like that they're getting in there, like kind of like Robinhood, offering those like no cost trades, super cheap robo advisor where you can kind of set it and forget it. For the average person, that's perfect. I think that if you want to get more complex and more complicated and really juice up your returns, I would go somewhere like Interactive Brokers. They have way better fee structure. Their customer service is the worst, but they do lend on your. So you could have a series of stocks, and they'll lend you 50% loan to value at any time at 1.5% interest. So let's say you had $1 million in a stock portfolio, generating you 50 grand a year in dividends. They'll say, hey, here's a line of credit on your stock portfolio for 500 grand, 50% loan to value, and you can borrow it at 1.5% interest. That's below prime. Anytime you want. You want to check out a case study on that? Mr. Ray Mustache just bought a property using his Interactive Brokers line of credit. But I've known about this for a while now. It's sort of the entry level before you get to private banking. And private banking, they'll go a little bit higher loan to value, but they'll do 50% loan to value anytime and 3-to-1 for options with Interactive Brokers. So, I mean, 50% loan to value is okay. Maybe you don't want to draw it all the way down, but let's say you had $1 million in stocks. You can move them to Interactive Brokers, and you could open up a line of credit there for 500 grand. Maybe draw $350,000, $400,000 down at 1.5%. It's crazy money. Like that's just, you know, your $1 million keeps growing. It's still in the stocks. You're just basically borrowing against equity that you have in that stock portfolio. And so even if you didn't even want to, let's say you didn't even want to buy any property or something, take that Interactive Brokers $500,000 line of credit and buy another 500,000 in stocks. So now you get $1.5 million in stocks. You only had $1 million before. Your portfolio is 50% bigger, and your interest cost is like 1.5%. Amazing, right? Interactive Brokers is game changer. That's where like with leverage and cheap debt like we have right now, the 4% safe withdrawal rate is like a joke. Like you can't. I think the 5, 6, 7% safe withdrawal rate is easily possible with leverage. So that's it's making it a lot easier to retire with firms like Interactive Brokers offering such low interest rates and going and levering up people's portfolios of stocks. It's just fantastic. It's allowing us to retire that much sooner. Like you can have $1 million stock portfolio, and you know you can have like $600,000 in actual of your own money, and the rest is just borrowed. And so now you're able to retire early with a lot less than you needed before, which is pretty sweet. I'm all for that. Next question. Scrolling. Getting closer to pulling the trigger on a Tesla. Yeah, I would love to pull a trigger on a Tesla. I really should. I could afford to. It's just the depreciation eats me alive, and the fear of like my kids getting in the car and just tearing it up in some way. Like my daughter will just take like her snack and just dump it on the car seat, and, like dump it on the floor, and then like take her feet and smush it in. So I'm hesitant to ever buy a new car. If I could find a used Tesla for a good deal that had a little bit of wear and tear in it, that would be perfect. So if anyone finds a really good deal on a used Tesla, I'm all over that. Send that to me on Instagram at Mike Rosehart, and I will jump on that. I already have the charger in my garage. The previous owners of our house had a Tesla, so I'm ready to go. I got the infrastructure there. It's just a matter of pulling the trigger, and I'd probably do it inside my corp, to be honest. It makes sense. You know, write it off against my realtor active stuff that I do and my lending and whatever other stuff I got going on my flips. That way, you know, when I'm going to those sites, I'll just bring the Tesla and I can write it all off. So yeah, I'm close. Steven says, how would you prevent from RRSP investment from taking more than 30% hit when you want to take out later? Well, the thing is, when you contribute to an RRSP, you get a tax credit at your current marginal tax bracket. So if you're in the 50% marginal tax bracket with active earned employment income, and you contribute, say, $100,000 to an RRSP, you get a credit back for 50 grand. The government gives you 50 grand sheltered. They say, hey, you can pay tax on that later. People think, hey, I'm taking a 30% hit or whatever your marginal tax bracket hit is when they withdraw from their RRSP. But I'm like, you literally already got tax forgiveness back on, like a credit back for that money you contributed. Now you're just paying the tax on it. You've just delayed it for 20 years. And so if you delay paying someone back for 20 years, you're basically paying them back nothing, right? Because the time value of money is such that $1, if I lend you $100 now and pay you $100 back in 30 years with no interest, then I've basically given you way less money than I did before, right? So yeah, I would say that it's not that bad. How do you minimize it? You withdraw from your RRSP slowly in retirement when your income bracket is lower. So ideally you contribute to your RRSP when you're in a high marginal tax bracket situation, and then you withdraw from it when you're in a low situation. So if people message me like, hey, I make 25 grand a year, should I be contributing to my RRSP and how much? I'm like, no, you're in a low tax bracket. Don't touch your RRSP. It doesn't even make sense. Wait, let the contribution room save up and use it in years you have high income. If you have a year where you're making 20 grand a year, you're making 100, contribute nothing until that year you made 100. So it doesn't make sense to actually use your RRSP room unless you're in a tax bracket that is going to be higher than it's going to be in retirement. And then ideally in retirement, you don't pull it all out at once and pay the marginal tax rate. You draw out a little bit every year and you keep in the lower brackets of tax, and you effectively shield all that tax from being, you don't want to pay all that tax. When do you need to be accredited with a company like Olympia Trust to lend money? I don't think, I'm pretty sure anyone can use a company like Olympia Trust to set up a mortgage as long as it's arm's length. My understanding is that someone could reach out to me and I could lend them for my TFSA or RRSP through Olympia Trust. That's why Olympia Trust exists, because they're the accredited party that does that. Yeah. Hello from Ottawa. Hello, Damien from London. Yuri says, real estate market crash is unavoidable. When do you think it will happen in Canada, and what would trigger that? What would be that pin that will burst this balloon, in your opinion? Depends on the market, right? Certain markets haven't appreciated in the same way. So we can't just make a blanket statement and say like Canada's going to have a correction, because I don't think that's the way it's going to happen. I think there might be sectors or small markets and cities that'll be affected, and other cities won't be affected. And it'll vary greatly based on economic factors. I think that some of those factors might be, like I referenced in a video I did last year, there was 4 things I talked about that drive a real estate market. And off the top of my head, I'm spacing, but one of them is demographics. And I think that it depends on the amount of immigrants we have come into Canada and the type of immigrants we have, the demographic of those people coming in and how they contribute to the economy. They push demand for housing. And so if we just open up the floodgates, like that was Trudeau's plan, was to open the floodgates up and let people come in, well, guess what? We can't build enough available housing to handle that load. And so another thing that contributes, I guess, to the boom, I guess, would be housing starts. So how many new houses and units are they building? With COVID, I personally have building permits in for additions, or in cases I want to do a secondary dwelling unit conversion, turn a 1-unit house into a 2-unit house. I had the permit submitted in September. I'm still waiting. The house is sitting empty. I can't start work till City of London gives me a permit. The way the City of London does it is they're supposed to have a 15-day response timeline on permits they submit. But if they come back with a question, they get an unlimited amount of time to approve the permit. So they'll look on it and be like, is this beam metal or wood? And you're like, what? It literally says right here at the bottom, it's wood or metal. And all they have to do is just ask a question. Even if the answer is on the drawings, they can buy themselves in their 6 months and kick the can down the road. So City of London really needs to get their butt in gear. I've been talking to about 6 investors here in London, all waiting for permits. I'm not the only one. I wanted to make sure that it wasn't just me. It's not me. Lots of other investors just sitting on their hands. I have people waiting for deck permits for over a month to build a deck. Like, construction is halted since last March, coming up on a year. And there's you can't add units, you can't renovate, lockdowns. So basically there's these lockdowns create no new housing. And guess what? People are being born, people are immigrating to Canada still, which makes no sense to me. We're in a lockdown, but they got plane loads of people coming from India and China, probably some of them with COVID. In fact, I know of some situations of people landed here in London to go to Fanshawe that came with COVID. And I'm like, what are we doing? At least now they're doing swabs. That's something. But anyway, so yeah, frustrations talking about housing starts and creation of supply. That is what we need, is creation of supply. But to talk about a correction on the other side, what could be some catalysts? Well, the biggest catalyst I can think of for a real estate market correction would be rising interest rates. Every 1% increase in interest rates should result in a 10% drop in real estate prices. We've seen the opposite happen. We've seen people borrowing from a 3% mortgage being a great rate. Now we're getting people getting a 1.5%, 1.39%. mortgages right now. So the market is just so messed up with all this cheap credit that it's just forcing prices up, right? And there's no one wants to sell because of COVID. And then you got to think, when there's a boom going on, no one wants to sell, period. They're like, oh, I better keep holding because it might go even higher. So it's one of those things where I don't know. I think that one of the biggest catalysts, Yuri, in my mind, would be rising interest rates, which I don't think will happen. The government's too in debt. They can't afford interest rates to rise. They would prefer the alternative, which is they keep interest rates low and they force hyperinflation. Why would a government want hyperinflation? Well, as their currency becomes less and less valuable, all the debt they have to pay back is lessened. So they keep interest rates low to keep their interest payments low to other countries and all the municipal bonds, federal bonds, whatever. Like people, they borrow money from the Canadian people, right? They issue bonds and they collect money. So all those investors, they just were to inflate everything a little bit. Guess what happens? They don't have to pay them back as much. And interest rates low means they don't have to pay as much interest. So their debt obligations are lower. So the government's actually incentivized to create hyperinflation and keep interest rates low, which forces real estate prices up. Here's the other benefit for the government to do that, and the incentive for the government to want to print more money and further create inflation would be as prices inflate, right? Your stocks go up in value, gold goes up in value, your land goes up in value. You have no more buying power. Like, you know, your everything rises together, and so you have no more buying power than you had before. But it feels like, hey, my $500,000 house is worth $1 million now. Sweet. But guess what? Everything went up in value. So your $500,000 house that's worth $1 million now still buys the same house it used to buy before. It didn't actually give you any life upward mobility. So it didn't really help you at all. There's no increased buying power. And the awesome thing about it for the government is when you go and sell those rental properties that now just appreciated in value, they get to capital gains tax you. And they're talking about increasing capital gains tax. And it is, mark my words, in the next 2 years, we're going up to 75% inclusion rate on capital gains tax in Canada. 75% in Canada on capital gains tax. That's coming because they're going to hyperinflate values and then they're going to tax it. Because guess what? Now you have the same buying power, but they took some in tax when you sell that asset. Or the same with your stock portfolio. They boost it all in value. They print a bunch of money. They hyperinflate. It makes sense. Their debt goes down. Your assets go up in value. And they get to tax when you sell those stocks and you sell that real estate. So it's actually the government's best interest to create inflation. Why would they ever want interest rates to rise? I mean, maybe there's a line of thought here, but if I was a politician, I'd be like, geez, all that hurts is the person who's losing buying power. Really, it's a way to tax the rich. The rich are only affected, like the poor don't have any assets to appreciate. So I guess the fixed income people are really screwed. So I'm sure the government will take all that capital gains tax money and roll out a universal basic income. They're already pilot testing that with CERB, $2,000 a month, free money to everyone. They'll probably just roll out some program like that and we'll keep having a third wave of COVID and a fourth wave. There'll be a new variant, some new virus. Maybe they'll manufacture it in a lab. I don't want to get into like conspiracy theories, but like it'd be really easy to do that. If I was a government, I'd probably get together and think about that. Or at least decide if the flu next year would be another lockdown. There'll just be lockdowns, I'm sure, and that'll force supply. So I'm actually bullish on real estate, but not for reasons that make any sense. If the government was reasonable and we had a free market capitalist economy, I wouldn't be as bullish about real estate. But because they're forcing supply down and saying you can't build, you can't increase densification, stop construction for a year, 2 years now, lock down everything forever. And then, by the way, here's a bunch of cheap money. Go buy more real estate so it increases in value. I mean, how do I go on a rant here? And I don't know. I just think that the government really needs to think long and hard about the future of Canada, where we're going to be in 50 years or 100 years. It's the long-term effects, like my kids' that I'm really worried for. It's going to be fine for me. I got a lot of assets. When they inflate everything, I'll rise with the tides. My buying power won't increase that much unless I lever up. If I lever up a lot, then if you lever up with a bunch of the bank's money and then they do that, you actually end up further ahead because you're levered 5-1. And so you end up with more buying power actually if you're levered properly as they hyperinflate. So pro tip, lever up. Cheap debt, the government's literally giving us signals. They're saying, hey, interest rates lowest they've ever been in hundreds of years, actually ever. They've never been this low. Here's a bunch of free money. The banks are proving everyone, take the money, enjoy it, spend it in the economy, buy assets, let them hyperinflate, let us tax you on it. I'm really worried actually for the bottom half though. The people on fixed income, the seniors, Those people making, not very much money. I don't want to get into conspiracy theories again because, like, I don't know if I want to get into that on here, but World Economic Forum, Great Reset, check that stuff out. I think there is some merit to an idea where if you watch, what's his comic's name? Like JP Spears, or I think his name is. He's got orange hair. He's a funny guy. He talks about. I watched a video he did. Is more satire than anything else. There's not a lot. There's like thin veils of truth in everything he's saying. You're like, oh shit, like he's got some points here. But the way he lays it out, it's hilarious. And he talks about this Great Reset. And I've read, there's actually a book called The Great Reset. I perused a little bit of it and watched some videos on it. But it's funny when we think about where we're actually going. If they keep printing money the way they have and force interest rates as low as they are, there'll be a class of haves and a class of have-nots. And all the have-nots will basically need to be supported by the government, which is what the government wants, right? Like the government literally wants people to be latched on. So if they have 51% of the people on a social credit score and you got free money from the government if you did what the government said, your credit, your social score was tied to how well you listen to the government, which is what China does basically. They have cameras everywhere, and you actually get a score based on how good of a citizen you are. You help someone cross the street or some shit. You don't jaywalk, and like all this kind of stuff adds to your social score. And your social score allows you to do certain things or not do certain things. And it's crazy. But that system, they're like looking at that in China and they're like, wow, that's great. Government wants more power, right? They want more control. And it would make sense, I think, to tax the wealthy to pay for the, I'll be long gone out of Canada by the time this is an issue, but like I really do feel fear for the people who are in Canada 50 years from now and a bunch of slaves. And basically you have to vote for the party who's going to give you the most money. And they're going to have the bottom half's going to have no way to have any control over anything. And with AI and some of what's coming in robotics, the government could literally send an army of like robotic police that can control you. And they could like have drones that fly around and kill or stun on sight. They want to start a lockdown, boom, no one can leave their house. They have full control, and it's crazy what they could do in 50 years. And so I'm more of a freedom market kind of person. So I don't know. I think that if you leave humans to their own devices within a set of parameters, that will flourish. And I think humans are innately good, and we will help one another. I think it'll be fair. Like there'll be a system where we aren't all equal, and that's why socialism and communism don't work, because we aren't equal. Some humans are more productive, etc., so forth. Some people value productivity, others don't. Anyway, I don't want to get down this rabbit hole of philosophy right now. I'll keep going through the questions. I've been mortgage lending through my corp for about 3 years now and making good income, Watts says. Since I have proven that it is sustainable and profitable business, can I get the bank to lend me against this value? Of all the mortgages, the value in the corp, would private banking do this? Watts, I don't know. Probably not. I feel like the bank doesn't like, I don't know, if you're really big maybe, like if you're a huge mortgage lending company, you're licensed, I think that they might. Probably a better option is to get all your mortgage money back, build a stock portfolio with private banking, get a line of credit on that stock portfolio, and then lend that entire line of credit. So you can put $1 million in a stock portfolio, they'd give you a line of credit for 700 grand, go lend the 700 grand out in the private mortgages. And then you'd have $1 million in stocks and 700,000 in lending. So your $1 million gets you $1.7 million investments in total investment. So you'd be net further ahead than if you just lent your money out. So pro tips. Next. Does buying a condo in downtown Toronto make sense? I mean, the market's kind of down right now when it comes to Toronto condos, so there could be an opportunity. I've never thought the cash flow made much sense, but I think long term, it's still, you're downtown Toronto. It's a prime location. There will always be desire for someone to want to live there, I would think. Unless we go into a new virus, a new age, a new normal, in which case there's just virus after virus after virus to control people. I don't know. I hope not. I hope this COVID virus wraps up. They're saying there's no vaccine that can treat the new variants. And so it'll be, as it continues to mutate, they'll need to make a new vaccine, and then there'll be another lockdown, et cetera, and so forth. So I've heard some major institutions talking about third and fourth waves. I don't know if we'll ever see an end to all of this. We should be protecting those at risk, and the rest of us should go on and live our life. I mean, that's my 2 cents. Protect those at risk. If you're at risk, protect yourself. If you're not at risk, I'm pretty sure I had it. Pretty sure I know a lot of people who have tested positive, who had it, who are friends of mine, colleagues, etc. in business, and they were all fine. They had it, and it was whatever. So it's not something to really fear. Like, I fear vid the same way I feared getting a cold when I go to work and people are sick around me. Like, I would always be like this in meetings when people are coughing because I don't want to get sick with a regular cold. Same way do I get the vid, right, or whatever new strain. But no, I don't think it's actually, like, healthy people are not actually dying from this. Very, very rarely. Same as the flu. The numbers are not that far off. The elderly were always dying of pneumonia and stuff. Now we just have it all the flu numbers just labeled COVID. But whatever. It is a serious thing, and I get it. Some people are really suffering, and those people who are at risk really need to protect themselves. We need to have COVID treatment centers to keep the hospitals COVID free. There's lots of things we could do better than we're doing now. Some good things the government could do if they were smart and they want to take the initiative on to plan. It's just easy to lock everything down, right? It's hard to actually make a plan and execute on it. Then the politicians have to actually do their job. They have to sit down and build plans and build, buy real estate or buy buildings, convert them into treatment centers, pay overtime wages to nurses and doctors, to set up COVID treatment centers. That would be a valuable way to handle this. Then the hospitals are all COVID free, low risk, right? Like, there's lots of things we could have done better from the start, but locking down is the easy option, right? And so they're like, lock it down and pay everyone money. That'll cost us, 100x what it would have cost, but whatever. Let's do it this way. That's what happens when you let doctors make economic decisions. Should I buy real estate in Austin, Texas as an out-of-country investor? I don't know. There's a lot of variables to go into that decision. That's a tough one. I can't say that it makes sense without looking at all the numbers, and it depends on where you live, and there's other places you can invest besides Texas that are also great. Idris says, hi, question here. I've already made $2 million for my investments this year. Can you talk about the best way to write off taxes? Talk to your accountant. Each situation is different, so you have to figure out how your situation is best suited for you. But any business expenses, you want to write those off against that gain, right? So, I don't know, cell phone bill, maybe related to your investments, you could write that off. Your car, if you had to drive to your investment properties, maybe you could write some of that stuff off. There's lots of cool things you can think of to expense. If you were smart about it, you would have planned ahead of time and said, hey, I'm going to set up a corporation for these gains, and in that corporation I might hire a staff or whatever, and so you can create some write-offs to mitigate some of your tax liability, or at least shelter it into a corp. But talk to your accountant about how to best structure that. 21, started my first job. Any advice? Work hard now and save, and then just invest in something, and try not to lose your money. That's the biggest thing you can do, because every dollar you can save now is going to be worth $50 or $100 when you reach retirement, because this eighth wonder of the world, compound interest. If someone offered to loan you $500,000 for 2 years at 7%, would you take it? Yes. But that's because I have opportunities that would pay me 20% or something on my money, right? And so in those situations, I can make a big spread on that money. I know in my flipping business, I can make 2% a month consistently. I know in real estate, beyond real estate, and options and businesses that I invest in, I try to target 2% a month. I don't always hit that target. Sometimes I exceed it, sometimes I don't, but I'm fairly confident I can deliver more than 7% return. So yeah, I would take that money and I would make the difference on the spread. But that's just me. Maybe you can't find an investment opportunity, and if that money's just sitting in cash in your account or whatever, it doesn't make sense to borrow that money. So it depends on what you plan to do with the money. You do not pay taxes on drip gains, from my understanding. That would make sense to me. That would be logical. I don't know if there are some situations where you do and some situations where you don't. It would make sense that you don't, because you're not getting any cash. So on a cash basis, it would make sense that they wouldn't tax it, but you never know. You never know. Tax laws are always changing. So I'm not as fresh as I was in 2013 when I took a tax course at IB. So I'm not as fresh as I once was. Should I buy a house now or just invest in the stock market? If you can qualify for a house and you can house hack, that's a great way to get started on your financial journey, because you build some great equity and you live for free. So that's what I love to do, is house hacking. Buy a house and rent out parts of it to cover the living costs. Drew says, under incorporation with real estate investments, are you allowed to invest in anything else under the same corporation? Yes, you could invest in stocks or whatever within your corp if you wanted to, but there are obviously tax rules around passive income that you want to explore before you go too deep into it. Mr. Frugal says, hi Mike, how do you get how do you get a mortgage on multiple rental properties? I don't know where I saw the word unlimited there, but the way you do that is, so there's a follow-up to that question. I often hear that it's difficult to get a mortgage on several properties if you have an average salary, since only half the rental income is considered against debt service ratios. So if you're buying properties in areas that have great cash flow, you could end up becoming more desirable as you acquire more rental properties. As an example, when I used to buy back in the day, I'd buy properties that I could rent out, that I could cram full of students or whatever and get a great rate. And let's say it was a $200,000 or $300,000 property, I could rent it for $3,000 a month. Some of the banks would take 60 or 70%. Some of the what do you call them? Credit unions. Some of the credit unions would take 70%. So it depends on who you're applying with, but yeah, at 50%, then they would add in, say, $1,500 a month in rental income to your application. So you have your, say, $50,000 salary plus $1,500 a month from the rental property. And then they would also include the rental income from the new property you're going to buy if it's an income property. So then that's it. New properties bring in $3,000 a month. So they include half that. So $1,500 again, that helps your ratios. So it can actually not be too bad to buy real estate. But yeah, I mean, you might have to play with the numbers a little bit and go to different lenders and stuff. But people are doing it. They're buying lots of properties. So it is doable. Especially if you have no student debt, no car, no consumer debt, then all you have is your real estate portfolio debt. It's not so bad to continue to buy properties. It actually gets easier in some cases depending on the properties that you buy. So yeah, if you're buying in like Toronto or Vancouver, then yeah, every property you buy would decrease from your available qualifying limits. Next question. I had an issue, but I started JV deals. There you go. How often do you see a good deal in the MLS in the $200,000 to $400,000 range in London these days? Very seldom in London these days. Right now, the market is messed up, on fire. Mike says, we need Google fiber optics in Canada. The monopoly and utter garbage service is fraud level. 100% agree with that when it comes to the internet service providers here in Canada. It's brutal. Some of the major areas in the town do have fiber, but I don't in my subdivision, so that sucks. Aren't there margin calls for borrowing from interactive brokers? Snake Eyes 11, yes, there are margin calls from borrowing. So you wouldn't want to, lever up all the way, right? So if you had $1 million stock portfolio and you're worried it might go down to 900,000 or 800,000 with a big market correction, possible, could happen, you might only borrow 400,000 of the 500,000 you have available to avoid a margin call, right? So yeah, I mean, you definitely want to, you're definitely going to want to look into that and make sure that you've got sufficient room there. But if you're reinvesting, let's say you're taking that $500,000 line of credit and you're reinvesting it back into your stock portfolio, then now your $1 million equity just went up to $1.5 million. And so now your eligible room on your line of credit just went from 500 to 750 with interactive brokers. So you could then double down again, would be my thought. You can just, in theory, I think you just keep going again and again, right? It just keeps increasing your available room. And so if you're using the interactive brokers line of credit or margin to buy more stock, then in theory you're further insulated and protected, so you could draw down the whole amount. So it just depends on what you're going to do with the money and how you're going to play it out. But yeah, totally. I mean, margin calls are possible, and you may need to have cash set aside or some available room in that line of credit to cover. I am a big fan of the unsecured line of credits. Set them up at every single bank. You can easily get $25,000 line of credit at every single bank. And that's what, 5 banks and like 3 credit unions, or 6 banks and 3 credit unions in Canada. So you can almost get $250,000 in unsecured lines of credits that you can have access to. And if you got margin called, you just take off your unsecured line of credit at 6% or something. And that's a worst case scenario, is you have access to that money. You don't draw it down. You keep those unsecured line of credits there in case you need them for margin calls. There's an idea. And keep the expensive debt there only for emergencies in times of market corrections. There's a lot of questions here. Jeez.
Look at the time.
Yeah, I see the time. Okay. I got like 5 minutes, guys. Let me just try to pick like my favorite 3. I love these conspiracy theories. Thanks. Singh says, couldn't agree with you more. I'm a builder in BC and can't happen to get permits in time as well. It's such a pain right now. This COVID lockdown has created an excuse for people not to work. And I guess that's good in some ways. People spend more time with family than ever before and stuff like that. But there's a lot of negatives from a lockdown. There's so many here. Credit card churning. These people are spending a lot, right? That's why they're churning a lot of credit cards. That's why Mr. Frugal, why they're getting so much in rewards, is because they're taking these credit cards and they're getting the $300 sign-up bonus, and then they're getting another credit card for another $300 signing bonus, and then another credit card set up with another $300 setup bonus, and they're spending the minimum they have to spend, and they probably are spending a few $1,000s in each one, so they get the bonus money. And yeah, I mean, it's not a lot, but if you did a bunch of credit cards in a year, you let it save up, you could probably get a trip out of it. Have you ever considered moving to other areas of Canada? No, I have ties to where I am here, and it's relatively good cost of living here in London. It's getting kind of out of hand, but no, I haven't really acted on any of that. We thought about it, moving to a small area where it's super cheap, but I don't know. At my stage in the game, the money doesn't matter as much as the lifestyle does. Want to thank you for being a great inspiration for myself. I'm sure for lots of others. I'm in control of 4 detached properties here in Calgary. Thank you, Michael, for sharing your life story and tips. Thanks, appreciate that. It means a lot to get comments like this. This is exactly, these kind of comments are what I like to see on the channel. So go share some stuff like this in some of the videos and smash the like button. Where will you go when you leave? I don't know. I was thinking about Florida for the winters. I was thinking about Puerto Rico. I've been thinking also about Costa Rica. There are some other places I've thought of, but those are, I think Puerto Rico and Costa Rica are my top 2 for right now, as I continue to explore the opportunities in that market, as well as the tax implications, as well as the lifestyle implications. Dude, you've been reading too many conspiracy theories. The sad thing is, I'm not even one to be a conspiracy theorist, and I'm first to dismiss this stuff. But there's a lot of evidence pointing to something. I don't know. Some people don't have our best interests at heart, and I don't know. I would like to think at least 10% of our politicians are smart people. I mean, the problem is we need 51% of them to be smart people, and 51% of them are not smart people. So it doesn't matter what the 49% think. There are some good politicians who I listen to who have very sensible, reasonable things to say. But yeah. Do you massage numbers in your taxes? No, I think it's not smart ever to massage numbers in your taxes. Will land you in jail. There'll be fines. It'll eventually catch up to you. Do everything legally. Follow within the book what is legitimate. Get a proper accountant. Study your tax rules. Claim everything. All that kind of stuff. I definitely would not recommend doing something that's going to end you up in jail. It's not worth it for a few $1,000s to have fines or jail time. Pay your fair share. I think the tax law could be written better. I think that I can move to another country where there's a zero capital gains tax, like Puerto Rico. There is no capital gains tax. So there's, yeah. I'll just stop there. George says, wise to invest in multifamily properties. I don't have any money to buy apartment buildings right now. I live in Atlantic Canada. Well, if you don't have any money to buy them, then it would be wise. The answer is it depends. Depends on the deal. Capital cost allowance on a rental. I don't do a lot of CCA depreciation. I'd rather not go through that recapture on the sale. So I just avoid it because it's complex. But yeah, I mean, if you're gonna hold the property for a long time, it can make sense. Does jet fuel melt steel beams? We're talking about some 9/11 conspiracies right now. I don't know. I don't think jet fuel does burn hot enough to melt steel beams. I think it isn't actually. The physics don't seem to line up with a plane crashing into a building and it collapsing with a series of explosions. That seems, I don't know. I mean, we all know Bush was admitted to going to war for oil, right? So I wouldn't put things like this past him. Okay, I think I got through most of the stuff here. Adam, it depends. I think that sounds like a decent deal. It's almost 1% rule. Who cares if it's, legal or not? You can maybe make it legal. You just run it as, with one lease and let them kind of split it themselves. There's lots of ways to get creative with that. But I have to go. It's my daughter's bedtime now, so I have to run upstairs and do that. Thank you all so much for watching the show tonight. I appreciate it. As you know, smash that like button. And of course, the secret to unlocking a wealthier you is to spend less, earn more, and maximize returns on the difference. So that's my catchphrase. I've been saying it for all this time. And I have a little unveiling treat. There might be possibly something coming in the pipeline where I'll be investing in potentially a book and potentially a course. So keep your ears out. There might be a book coming. And I appreciate if people have been following me all this time for the last 3 years this March would, if I do work on a book and get it published, it'd be cool if you bought it, just to show support or whatever. If you don't have the money, that's cool. I understand. Same with the courses. If someone's finding value from it, I might start dropping some courses, and it'll be money back guarantee or whatever if people don't find value in it. But I'm thinking I might invest in that. There's a big need in the space for education, and I think that it's something I want to invest in for some time now. And so I'm looking to partner up with someone and do a joint venture partnership where they do most of the heavy lifting, but I help with providing some of the content and stuff. So cool. Thanks all so much for watching, and I'll see you guys in the next live stream and on Instagram at Mike Rosehart. You guys know where to find me. I'm always accessible every Wednesday, 7 to 8 p.m. Eastern Standard Time on the channel. Bye, everyone. Have a good Wednesday. Conspiracy theories.